Hello, good morning. Good morning, everyone. And I'm so glad to be with you here this morning. So let's kickstart the session by confirming that you can see my screen and you can hear my voice by typing hi in the comment section. So let's see if we can see my screen here and can hear my voice clearly. Okay, so what do we have in the comment section? Okay, 4087, thank you. Mr. Zoo, good morning. Happy 4. All right, 475, good morning to you. Seba 090, good morning. 4101. All right, hey Carrie, how are you doing this morning? Good morning to you too. All right, so I'm so excited to be with you this morning. Welcoming you once again to yet another promising session on the Extra and Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where we shall be evaluating the financial market together using technical parameters to identify trading opportunities lining up for us this week, and in fact during the New York session today. And for those who are joining us for the first time, you are welcome. I'm so excited to have you guys around. And what we simply do here is to come together as a community in anticipation of the New York session, looking out for trading opportunities that we can take advantage of. And every Mondays like this, what we do is to choose random pairs. So this is a very suitable opportunity for you. So if you have any financial instrument you want us to look at, feel free to drop it in the comment section. And I promise you that we shall be monitoring this pair throughout the course of the week. So this is how we do it every day, 10 a.m. UTC, in anticipation of the New York session. At first, it might look overwhelming, being the first time you are with us. But trust me, the more time you spend with us, the better you get to understand how things works, and you will be able to use the information you have gathered here to make your individual and personal decision. So with that being said, the first thing we normally do every morning like this is to keep tabs with the fundamental aspect of the market by checking high impact macroeconomic event. So what I simply do here is to go into my economic calendar. So I want to be focusing on high impact macroeconomic event that will be affecting any of the instruments that I want to be monitoring for the week. And for this week, we are going to be focusing on events that will be affecting the US dollar, the pound sterling, and the Japanese yen. And if you look at the economic calendar, which is right in front of your screen right now, the first high impact event came in earlier today, and that was from the Japanese economic docket. And this is the monetary policy meeting minutes. This happened about 11-12 hours ago, and I'm yet to get an highlight on this one, but by tomorrow I should be able to get something, and we shall be using that to guide our trading activity going forward. So beside this, we do not have any high impact event to look out for. So with that being said, here we shall be diving right into the chart to look at things from a technical standpoint. So the first commodity we are going to be looking at this morning is the US oil. And from the US oil daily time frame, this is what I was able to see here on this chart. So let's look at what has been happening on this chart in the last 4, 5, 6 months in this market. And one thing you will observe here is the fact that price action has been within a choppy situation since the beginning of the month of November. So we saw our price action was ranging between the $82 area and the $70 level in the last 6 months. And this further emphasizes the level of indecision in this market as sellers and buyers continue to trade within this range. However, something interesting happened during the month of March as we saw price action break down the $70 level for the first time. And after the breakdown of the structure, we saw our price action climbed up give us an impulsive move back into the resistance line, which also shares a beautiful confluence with a bearish trend line, which has been supporting that bearish momentum since the beginning, since the second half of last year. Sorry about that. Second half of last year, we have been seeing that bearish momentum. Now, the whole bearish move we witnessed in the last couple of weeks, we saw here, we considered it to be a retracement of that impulsive move, and as a result of that, we projected an area between the 50 and the 78.6% of the previous impulse leg as an area where we are going to be looking out for a trend, a reversal pattern that will incite a trend continuation. And what we did here was to use our Fibonacci retracement tool, run it through the previous impulse leg, which you can see on your screen right now, and that area between the 50 and the 78.6% was mapped out. However, we noticed that the price action broke through the 50%, broke through the 61.8%, and right here it got into the 78.6%, and we begin to see some buy pressure during the later part of last week's trading session to signal that we are more likely be seeing a bullish momentum in the coming week. And this was also this whole situation here was as a result, the buy pressure we were noticing here from a fundamental standpoint, it was seen as is as a result of the strong US job data that came in on Friday, which is often seen as a plus for the oil, whose consumption depends on people's mobility and economic vibrancy. So these are things that we might likely be seeing a bullish momentum this week. So in order to have a better perspective into what is going on here, so what I did here was to scale down into our 1 hour time frame, where we want to be looking at things from a technical standpoint. So we have a key level for the week sitting at the $70 area, which if price action continues to trade above the $70 area, we shall be looking out for more buying opportunities in this market. So in that regard, I scaled down into the 4 hours time frame, and there is a simple setup I want us to see here, which we shall be using to guide our trading activity for the week. And the first thing you would observe here, if you consider what has been happening in this market since the beginning of last month, you will see that price action has been on a bearish momentum. And in fact, to further emphasize the strength of the sellers in this market, we have connected the series of lower highs to give us the resistance line of this descending channel. And then we also have the lower lows here, which gave us the support line of the descending channel. And with the look of things right now, price action appears to be approaching that resistance line at this point. So we are approaching a very critical structure in this market, where depending on how price action reacts to the resistance line, will be determining if we are going to be buying or adding or selling at this point. So one of the things that we are going to be looking at I already have a buy position above the $72 level this morning, and I'm looking forward to see how price action will be reacting to this trend line to decide if we are going to be selling. So if selling pressure resumes below the resistance line, that is, we see all attempt by the buyers to break out of the resistance line rejected by the sellers, then we might likely be seeing a bearish momentum respecting that resistance line one more time. However, if price action breaks out of the resistance line, then at this point we want to be thinking of adding more position to our existing buy trade. So in order to have a better perspective of what is going on above the $72 area, we shall be scaling down into the 1 hour time frame so that we can monitor how participants in this market has been reacting to this current structure since the beginning of this week. Now, with the whole situation we have here, it is quite obvious that this week started on a bullish note. So at the beginning of the week, I was able to identify the support line for the week, which is sitting at exactly the $71 area, which happens to be the lowest point price action had ever been for this week. And if we go to as far back as Friday of last week, we saw how that same level was a buying niche for participants in this market. And what I did here was to wait for price action to break out of the $72 area for me to be able to join a bullish momentum. So the breakout of that structure definitely would have been a very beautiful signal for us to continue to the upside. And for those who took advantage of this opportunity, well done to you for being on standby to catch that move. And if you had done that, you will currently be running with about 95 pips in profit at this point. And the next thing you want to be doing is to move your stop loss accordingly to lock in some profit. And for those who had missed out on this opportunity, it's okay. We're still at the beginning of the week, so there's still a lot of time for price action to evolve, giving us a new setup that we can actually use to take advantage of another opportunity. And you all know from a technical standpoint that whenever price action breaks out of a key structure like this, we expect that one point in time price action will come back to retest that structure to incite another wave to the upside. So if you had missed out on the breakout of the $72 level, then we want to see price action come back and do a retest of this level for an opportunity if we start seeing buy pressure above the $72 area to be part of a trend continuation. So that is one scenario we are going to be looking at going into the New York session today. Then another thing that we want to see here is the transition of price action. So when I look left here and go to as far back as Tuesday of last week's trading session, there is a structure around the $72.50 level, which was a area where sellers rejected the bullish attempt at this point. So for the sake of simplicity, we want to connect that level. I think the $72.60 area, so that we can also use that level to guide our trading activity for today. So we have the $72.60 level figured out at this point, and price action appear to have broken out of that structure. So if price action does not come back to the downside, that is, if price does not drop into the $72 level, and instead it continues to find a consolidation phase just right above the $72.60 level, then a breakout of that structure should be welcoming more opportunities to buy. And depending on how price action reacts to the trend line, remember I shared this on the 4 hours time frame that the trend line here is a very critical point, just exactly around the $73 area. We want to see how price action will be reacting to that structure, where a breakout will give us an opportunity to add more buy position to our existing trade. And if selling pressure resumes below the structure, then we might be getting ready to join a bearish move to the downside. So these are the things we are going to be looking at on the US oil spot for today. So we're still looking bullish at this point. So as long as price action continues to find higher highs in this market, breaking out of the resistant line of that descending channel, we continue to look out for more opportunities to buy. But if price action gets into the resistant line and we begin to see signs that sellers are continue to negate that trend line, then at this point we shall be looking out for opportunity to sell around that point. So let's see how price action reacts to that trend line to decide what our next line of action will be on the US oil spot for today. All right, so if you do have any questions, feel free to let me know in the comment section. And on this note, I will be moving on to the next pair. I will be checking the comment section from time to time to see if there are any inquiries for me. So with that being said here, I will be moving on to the next option, which is the US Tech. And on the US Tech 100, our US Tech 100 was one of our most profitable trades last week, as we were able to do some buying opportunity in this market, hereby giving us some significant profits. Then we also had some sell positions too as well. But now that we are going into the new week, we want to have a fresh new perspective of this current market structure. And looking at what has been happening on this chart since the beginning of the year, it is quite obvious that price action has been bullish in this market. And if we take a closer look at the structure, you will see that the market structure here has transitioned into an ascending channel, which further emphasizes the level of buying strength in this market. So as you can see, we have been seeing higher highs and higher lows in this market. And one interesting thing during the first day of the month of April was the fact that price action broke out of that 12,800 level for the first time in over 5 months in this market, to give us a signal that buyers are getting stronger in this market. And if we zoom into the trading activities since the month of April here, we were thinking at the beginning of the month of April that this breakout of the structure could likely be a very huge signal for us to join a bullish move to the upside. But you can see what happened here. Throughout the course of the month of April, we saw our price action fell into a range between the 13,220 and the 12,800 to further emphasize the level of indecision in this market. And if you look at what has been happening in the last couple of days, you will see our price action is currently ranging around that resistant line, which appeared to have been broken a couple of times in the last couple of weeks. But we have seen that as soon as price gets into that structure, we saw our sellers continue to negate every buying attempt from that level. Now, with the fact that we now saw a higher low in this market last week, I'm of the opinion that a bullish momentum is looking very promising at this point. So going into the new week, I have a key level already figured out at the 13,320, which will be serving as our yardstick for this week. And what this simply means is that if price action breaks out of the 13,220 to the upside, we continue to look out for more buying opportunity in this market. But if selling pressure resumes below the structure, then we might be in to join a bearish move to the downside. So we are going to be scaling down into a much more lower time frame to see how participants in this market has been reacting to this 13,220 level since the beginning of today. So going down into the 1 hour time frame, this is what I was able to spot after monitoring how majority in the market has been reacting to the structure. So let me scale in. So this is 13,200. In fact, I had to make it 13,300 here. So let's see how this works out for us at this point. So what I did here was to monitor how participants in this market has been reacting to the structure. So this is what I was able to come up with after looking at what has been happening in this market in the last 12 hours. So look at what we have here. You will see that price has been ranging since the beginning of today, where price action is caught within the $13,265 area and the 13,230. Now, this whole situation here, if we consider the impulsive move that got us to this point, the first thing that will come to mind is to look out for a trend continuation pattern. So if we take into consideration this impulsive move that brought us to this point, where leading to a situation where price is caught within this range, it's looking more like a bullish rectangular pattern, where a breakout of the 13,265 will now confirm this to be a trend continuation pattern. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the resistance line for buying opportunity or breakdown of the support line for selling opportunities. And with the situation we have here, I have a buy stop order sitting above the 13,265 level, where we shall be looking out for buying opportunity in this regard. So a buy stop order above that level, and if we are lucky enough, if price action comes back to retest the structure, it will be welcoming more opportunities to add more position to our existing trade, and a further breakout of a 13,300 level will definitely be another huge opportunity to add another position to our existing trade. However, in as much as we are looking out for buying opportunities in this market, it is always important that we also take into consideration the potentials of the sellers in this market. Now, if we look at this whole structure, the fact that price action has been ranging between the 13,265 and the 13,230 level is a sign that there is an indecision in this market, where majority are looking forward to probably a catalyst that will give a sense of direction. And one thing about this kind of flat channel is that despite the fact that it has a tendency of transitioning into a trend continuation pattern, it could also turn out to be a reversal pattern. And this could be as a result of profit-taking activities. Now, what do I mean by that? Now, if we look at how price action started from the $13,000 area, you would agree with me that majority who had bought this instrument at a very cheap price will at one point want to be taking some profit off this market. And since we had an impulsive move to the upside here, definitely majority will want to be doing some profit taking activity, which is definitely going to be reflecting on the chart as a retracement phase before another wave of bullish momentum will happen. So if this turns out to be a retracement phase, then definitely a breakdown retest of the 13,220 will be confirming this perspective in this market. So if a breakdown of the 13,230 happens, remember, we are not getting too excited to jump right into that sell position, as we want to see some confirmation that will give us that leverage to be part of that move. So we wait for the breakdown happen, look out for a retest of structure, then we can actually join that move to the downside. And in order to project where the retracement phase could likely end, what we want to be doing here is to take into consideration the impulsive move, bring out our Fibonacci retracement tool, run it through the previous impulse leg, and aim at that area between the 50 and the 78.6% of the previous impulse leg, which we are going to be having somewhere around here. So I would like to label this area as the TP target for sellers, and a potential demand zone for buyers. So I would like to place this right inside that box. So we have the center here, and then we have this area. Okay, so we shall delete the retracement tool now, no longer needed. So what I'm simply saying here is that if price action breaks down the 13,230 level, then at this point we want to be seeing a sign that price might likely be going to the downside. So we are going to be having a TP target between the 13,120 and the $13,000 mark area to take the profit of that counter trend opportunity. And if price action drops into the structure and we begin to see something like a reversal pattern, probably in the form of a double bottom structure, head and shoulder pattern, or a falling wedge, then we might get it ready to join the second wave of this bullish momentum in this market. Now, and one thing about this structure here is the fact that it also shares a confluence with that bullish trend line that has been supporting the bullish momentum in this market. I think this will be clearly seen on the 4 hours time frame. So for the sake of clarity, let's scale up into the 4 hours time frame so that you can see things more clearly. So since the month of April here, you will see that I connected a series of higher lows in this market, giving me this bullish trend line you can see here. So if it so happens that price action drops into that trend line, you can see that it shares a confluence with that TP target zone for sellers and a potential buy zone for buyers. So let's see how price action plays out on this one. So in summary, on the US tech, we already have a simple setup. We have a range between the 13,265 and the 13,230, where we are going to be looking out for either a breakout of the structure for buying opportunity or a breakdown retest of the structure for selling opportunities. So I would advise that we be on standby to catch this move. And one thing about this whole situation here is that it is very likely that market is looking very slow this morning actually, and this as a result of the public holiday. I just learned that a couple of minutes ago that there is a public holiday in the United Kingdom. So because of this, we might likely be seeing a slow start to this week. So it's always a time where compulsive trading is always very prominent, so we don't want to get caught up in that kind of situation. So let's ensure that our setups mature before we want to be joining any potential move in this market. If you do have any questions, feel free to let me know in the comment section, and be rest assured that I am willing to be of help. So moving on right now, I'm going to talk about the GBPUSD going forward. And on the GBPUSD, let's quickly run through the daily time frame so that we can have an holistic perspective into this market. Now, on the GBPUSD, we have been quite profitable in the last couple of weeks, as we have been buying this pair since price action broke out of that key level we identified at the 1.24550 area, at a level which was a strong selling niche since the month of December, and not until the last couple of months we saw a significant breakout retest of that level to set the tone for a bullish momentum. However, there is something interesting about this whole structure. We saw price action find a new high at a 1.26550 level. As you can see here, this happened last week. That's the highest point price action has ever been this year. So at this point in time, we are at a critical level where a lot of patience is required so that we can actually be part of a potential move. And there's one thing I would like to show you here before we go into the details of what our expectations are. So if we zoom out on this chart, though it might look a little bit tiny at this point, if we zoom out and go to as far back as the month of May 2021, this is exactly close to 2 years now, you will see that price action has been bearish in this market. And to further emphasize the strength of the sellers in this market, when we connected the series of lower highs, we have this bearish trend line figured out. And if we zoom into what is happening at this particular point in time, where I told you price action has hit a new high at the 1.26550 level, you will see how price action is currently trading just around the trend line here. Then at this point, you would agree with me that we are at a critical point in this market where anything could actually happen. If price action breaks out of both the trend line, which appears price is trading above the trend line already, and the 1.26550 level, this will be a sign that buyers are getting stronger and the trend line may no longer have the capacity to resist all the buy pressure around that area. Then a retest of structure will give us further confirmation to be part or add more position to our existing trade. So if you want to be part of that move right there, we should be having like a stop loss of about 35-40 pips thereabouts, so that we can be part of that move, and as well give room for price action to breathe just in case price action comes back to do a retest of that structure in anticipation of the trend continuation to the upside. So that is one scenario we are going to be looking at around the 1.26550 level. Then another thing about this whole structure is that since this is a long-term bearish momentum, and the fact that the trend line had continued to support selling pressure in this market, there is a likelihood that sellers could still come in again at this point. So if during the week we see price drop back into the trend line, then we might likely be in for another wave of bearish momentum. But for us to have a better perspective of what is really going on around this confluence, we need to scale down to a much more lower time frame. And in fact, on the 4 hours time frame, I was able to identify a simple setup that I think we can use to guide our trading activity for this week. So this was what I was able to identify here. So it is quite obvious price action has been bullish, and during the course of last week's trading session, we finally saw the breakout of the 1.25700 area. So this level was finally broken to the upside last week. In fact, we saw a confirmation as price action came back to retest the structure. As you can see here, we saw the breakout, we saw the retest of structure, and we saw our price action has been continuing to the upside in that regard. So everything is looking more bullish at this particular point in time. So on the 4 hours time frame, I have two structures. I have the 1.257, which was broken to the upside. Then I also have the resistance point, which is the highest point price action has ever been this year, which is the 1.26550. Now what we are going to be doing right now is to try to decipher what is going on around that point to determine what to do at this juncture. So we shall be scaling down into the 1 hour time frame so that we can see how participants in this market has been reacting to that level. Now when we scale down into the 1 hour time frame, I already have a buy position triggered already, and if you are taking advantage of that, well done to you. So since the beginning of the week, we saw our price action had been caught within a range, price action trading between the 1.26550 level and the 1.26250, giving us a situation where price action is consolidating. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the resistance line of the channel or break down the support line of the channel for trading opportunity. And with our orders placed at both ends, it appears that I already have a buy position triggered at this point. And for those who are taking advantage of this one, well done to you. Make your stop loss somewhere right around the support line there, which will be dovetailing to about 20 to 25 pips stop loss in this market. And at this point, let's see how far this bullish momentum is going to be going. Now, one thing I would like to do here to project our bullish expectation, our TP target for this bullish momentum here, is to use our Fibonacci extension tool, run it through the impulsive move here and aim at an area between the 127.2 and the 161.800 area, which is dovetailing to about 65 pips, which is about a risk reward ratio of 3 to 1 at this point. However, if we look at things from a much more higher time frame, that if you are a long-term trader and you want to take advantage of this move from a long-term perspective, then what I will be doing here is to project this impulse leg from this bullish trend line here. The last time price action tested this bullish trend line was at this point. So if I'm going to be extending that leg, then I want to see something like this from this point to this point. Then we have this whole area. So between the 1.27170 level and the 1.280 area seems most appropriate to have our TP target for this current buy position, which will be dovetailing to a minimum of let's see how many, of about 70 pips and a maximum of about 145 pips. So let's see how far this bullish momentum is going to go in this market. Now, in as much as we are looking out for buying opportunity, which we're already in actually, and price action is moving in our favor currently, please, one thing you should note here is that as soon as price action moves significantly well, we want to move our stop loss to secure the position by moving it into our entry point, so that in case price action goes against us, at least the worst case scenario is going to be at break even. So in as much as we are looking out for buying opportunities in this market, the chance of sellers too are also very important to consider. So what happens if price action takes us out of our current buy position and we see a situation where price action drops to the downside, breaking down the support line here at the 1.26250 level? Then at this point in time, we want to be considering a momentum shift. But one thing about this whole situation is that, considering the fact that price action has been bullish since last week and we have a bullish trend line to that effect, we need to be very, very careful, as if a breakdown of the 1.26250 happens, we want to see price action give us a further confirmation, which is likely going to be coming in the form of a retest of that structure. So this is what we want to be seeing on our lower time frame. When price action breaks down the 1.26250 level, we want to see price action do a retest of the structure, selling pressure right below the 1.2625, and at this time price action will be trading below the trend line, and below the structure will be most suitable to be selling the GBPUSD. So this is how we are going to be selling the GBPUSD today, only if price action breaks down that support line at a 1.26250, and that will, and as you can see, it also shares a beautiful confluence with that bullish trend line that we have here. So let's continue to monitor price action in that regard. If the bullish momentum continues considerably well, kindly move your stop loss accordingly to lock in the profit. If you do have any questions, let me know in the comment section. We'll be taking the next 10 to 15 seconds to read through the chat and see if there are any questions for me. All right. Okay, so let's move on. In the absence of no questions, I want to assume that we're on the same page here. So the next pair I'm going to be looking at for today is the XAUUSD, which is the gold commodity. The gold was another pair that we scooped quite a lot of profit on the gold last week. We had some sell positions. We also had some buy position, which took us into the highest point price action had ever been this year. Excuse me, at around the $2008 mark. So for the sake of this video, let's run through the daily time frame so that we can have an holistic perspective into what is really going on in the gold commodity market. So right here, if we zoom out a little bit, you will see that since the month of October last year, it is quite obvious that price action has been bullish. And to further emphasize the strength of the buyers in this market, I had this higher highs and higher lows connected to give me this ascending channel you can see on your screen. However, something interesting happened since the month of March. Let me zoom in so that we can see things clearly here. So since the month of March this year, we saw our price action broke out of the $2,000 mark, and since then we have been witnessing situations where price action used that platform to test new highs in this market. And one interesting thing about this whole structure is that if you look at it closely, you will see that price action appear to be retesting the resistance zone of that ascending channel in the last couple of months to further emphasize the level of sellers in this market. And there is always a psychological explanation to this whole situation here, which is as a result of the fact that price action has found a new high, and it always takes quite a lot of time and energy for price action to acclimatize with this level. And as a result of this, we normally see price action go into situations like choppy scenarios and retracement phases, which is what you have been seeing here in the last couple of months. Now, with the situation we had here prior to last week's trading session, we saw this old choppy situation between the $2,000 mark and the 1,970 area to give us a consolidation phase, which at the end of the day became a platform for bullish momentum. As we saw the breakout of the $2,000 area, price action tested a new high, and we saw our price action came back to retest the $2,000 level one more time. Now, if you look at this whole structure from a technical standpoint, seeing the breakout of that $2,000 mark is a significant signal that we might likely be going bullish this week. Now, if we look at this, a breakout of structure, we expect that price will come back to retest the structure, which it has already done on Friday. And if you look at the nature of this bearish candle, you would notice that despite the fact that it's a bearish candle, we had a sharp rejection of the $2,000 mark, which gave us a clue into the presence of the buyers in this market. And since the beginning of this week, you can see that buyers had continued to emphasize their presence in this market. So what we want to be doing right now is to go into a much more lower time frame to identify what is really going on in this market. Now, when we scale down into the 4 hours time frame, this is what I was able to spot here on the 4 hours time frame, which shall be the basis upon which we are going to be plotting a plan to trade the XAUUSD for this week. Now, look at the structure I was able to spot here on the 4 hours time frame. So we have a channel between the $2,050 area and the 1,975 to emphasize the level of indecision since the beginning of the month of April. And with the breakout of this $2,000 mark level last week, seeing a retest of the $2,000 area, the next question we want to be asking right now is this going to be a platform for another wave of bullish momentum, or are we going to be seeing a situation where price action will drop down to the downside, probably as a result of this bearish impulsive move that started on Thursday around the $2,050 mark area? Probably this bullish momentum is a retracement of that move to incite a sell-off that will break down the structure at the $2,000 area. So these are one of the two things we are going to be looking at, and in order to have a better perspective into what is going on, we want to see how majority in the market has been reacting to the structure since the beginning of the week to know if we are going to be buying or selling the XAUUSD. Now, scaling down into the 1 hour time frame and looking at it from a technical standpoint, this was what I was able to identify this morning. So when I scaled into the structure and monitoring how the behavior of participants in this market around the structure, I am of the opinion that things are looking very bullish in this market. And why have I said so? Well, the first thing we observed here this week is that price action started at this support line at the $2,015 area, as you can see, and since then price had continued to find higher highs and higher lows in this market. And for those who are taking advantage of that bullish move from that area, well done to you for being on standby to have caught that move. Personally, I missed out on that one as it's a midnight here when those trading activities happen. So with the whole situation happening here, I have a buy stop order sitting above the $2,025 area, which I think you should also consider. So anywhere above the $2,025 level seems most appropriate to have a buy stop order, with the hopes that price action is going to be breaking out of the structure to incite another wave to the upside. And if a retest of structure happens, then that's a very good sign for us to add more position to our existing trade. However, if price action instead continues to drop to the downside at this point, then we might likely be seeing a trend continuation that will break down the support line. Now, if we consider the impulsive move that started on Thursday, leading into the test of the $2,000 area, this whole buy pressure we have been witnessing since Friday could likely turn out to be a retracement of that impulsive move to incite a trend continuation to the downside. So these are scenarios we want to take into consideration too as well. So we are going to be having a sell stop order below the 2015 to be part of that bearish move if it happens. But one thing that people will ask me is that, are we going to wait for the old 50 pips move to happen before joining at the breakdown of the 2015? So what we want to be thinking of right now is, how can we join early enough even before the breakdown of the $2015 level happens? So the first thing we are going to be doing here is to acknowledge that since Friday of last week, price action has been bullish, and if we bring out our line chart, we have a bullish trend line on your screen right now that we are going to be using to guide our trading activity for this week. And what this simply means is that as long as price action remains above this bullish trend line, we shall feel comfortable in a buy position. But if at any point in time price action breaks down the trend line, then at this point we are going to be considering a bearish move. So breakdown retest of the trend line will give us a sign that sellers are gradually gaining momentum. Then we can join at the breakout of a structure on our lower time frame. So we have joined early enough before the breakdown of the $2015 area, where another opportunity to add more position to our existing trade will come in. So these are one of the things we are going to be looking at. So we are looking forward to buying opportunity above the $2,025 area, using the bullish trend line as our yardstick to guide bullish momentum. And if at any point in time the trend line is broken to the downside, then we shall be getting ready to be part of a bearish move. Now look at what has been happening around this area since in the last 6 hours now. We have been seeing a choppy situation just right around the resistance line of that channel we identified earlier. And to that effect, what I did here was to scale down to a much more lower time frame, like the 15 minutes time frame, to see what is really going on around that area. Now on the 15 minutes time frame, we had this old setup, the $2,020 area. As you can see here, we have a flat channel between the $2,022.50 level and the $2,020 area. And what we saw during the last couple of hours in this market was the breakout retest of the $2,022.50 level, further emphasizing that buyers might likely take over this market. So a breakout retest, if you are joined, well done to you. So we had a breakout retest of structure, we saw buying pressure, and price appears to be heading towards the upside here. So with a buy stop order, we want to see more opportunities to add more position to our existing trade. And like I said earlier, if price action drops below the trend line, then at this point we want to be considering selling. So personally, we should be having a sell position below the 2020 based on this current structure. Remember, this level had been a very strong demand zone, at least in the last 3, 4, 5 hours in this market. You saw what happened early on this morning, where despite the fact that sellers were negating that $2,025 area, which is the resistance line for this channel this week, we saw that the 2020 level had been negating all attempt by the sellers to break down that structure, which is a sign that buyers are gradually gaining momentum. And at the same time, it shares a confluence with the trend line we identified earlier. So for us to sell the XAUUSD today, we would rather wait for price action to take out all the buy positions at this area, that is at the $2,020 level, for us to have a signal that sellers are coming in. And if we do see retest of structure in our lower time frame, this will give us more opportunities to add more position to our existing trade. So this is how we are going to be selling the XAUUSD. So we are looking for structures right below the $2,020 level and the trend line for an opportunity to be part of a bearish move to the downside. And if price action remains above the $2,022.50 level, we look out for more opportunities as we anticipate the breakout of the $2,025 area to buy or add more position to our existing trade. So these are my views here on the XAUUSD for today. If you do have any questions, feel free to let me know right in the comment section. I saw this comment from 756 asking for XAUUSD. So we just spoke about XAUUSD now. Elangovan. All right. We just did XAUUSD. We did GBPUSD a moment ago. I hope you are around when we did that. Aki88 is asking me that, what do you think, when will the oil price go up? Okay, I spoke about the oil a couple of moments ago. Let me know if you are still around, Aki88. If you're still around, I could still take you through my thought process on what I think from a technical standpoint. So let me know if you're still around. If you're still around, let me know in the comment section and I will take you through my thought process again on the US oil. Okay, Vamsh, good morning to you. Glad to have you around. 728, good morning to you. All right. So I look forward to seeing your comment, Aki88. All right, so let's move on to the next pair. And the next pair, which is going to be the last instrument for today, and that is the USDJPY. So we shall quickly run through the daily time frame here to see things from an holistic standpoint before we go back into the details on a much more lower time frame. Now on the daily time frame, remember we have this whole structure figured out for the last couple of months now on this chart, as we continue to see the 131.00 area as a very strong demand zone in this market. As you can see here, it has lasted about 10 to 11 months, over a year now, I guess, because it started in the month of April and right now we're in the month of May. It's over a year price action has been respecting that area, as we saw every attempt by the sellers to break down that structure has been met with strong resistance from the buyers. And this further was confirmed during the second month of this year, that was in February, when we saw price action break out of this trend line that you can see on my screen right now. So we had this trend line figured out since the month of October of last year, and what we saw in the month of February was quite interesting, as we saw the breakout of that structure. And from a technical standpoint, we expect that price goes to come back, retest the structure, which it did in the month of March, and we saw our price action transition into a reversal pattern in the form of a double bottom structure. And I think about 3 weeks ago, we anticipated this this reversal pattern after citing that that potential double bottom there. So we had the neckline of that reversal pattern figured out at the 133.800 area, where we were looking forward to a breakout of the structure to confirm the validity of that reversal pattern. And thank goodness, in the last couple of weeks, and in fact until last week, we saw our price broke out of the neckline to give us about 500 to 800 pips there, as we had multiple entries during the course of that week to take advantage of that move. And then during the course of last week's trading session, we saw this whole bearish momentum began again from the 137.500 area, which you can see here. So we saw the same thing happen. This area has been a strong selling niche in the past. We saw what happened last week. We saw selling pressure resume again, bringing price back into that neckline area at the 133.800. So you can see how important the 133.800 has always been in this market for buying niche for participant here. Then in addition to the 133.800 is this bullish trend line here, after connecting this series of higher lows since the month of March of last year. We can see our price action had consistently found higher lows in this market. So for this week, I'm going to be using that trend line as my major yardstick to guide my momentum. So as long as price action remains above this trend line, we shall feel comfortable in a buy position we are in. And if at any point in time price action drops below the trend line, then we shall be looking out for selling opportunities in this market. But if you look at what happened on Thursday and Friday in this market, is looking more of a bullish momentum in this market, as price might likely continue to the upside further. So let's scale down to a much more lower time frame so that we can see how participants in this market has been reacting to the structure in the last 1 week. Then we can make a decision on a much more lower time frame. So scaling down into our 4 hours time frame, this is what I was able to spot on the 4 hours time frame. And the first thing I did here was to take into consideration price actions activity since the later part of the month of March, and this is what we saw here. So connecting the series of higher lows, we can see that it's obvious that price action has been bullish in this market. And another thing last week was this demand zone that we had here. I think the last week of the month of April stroke last week, we saw how the 133.500 area was a demand zone where sellers found it difficult to break down the structure. And one interesting thing about this demand zone is that it also shares a confluence with that bullish trend line on your screen. So at this point in time, with these two structures, that is the demand zone at the 133.500 and the bullish trend line, this whole structure is screaming bullish. Now, to further be able to catch any trading opportunity here, we need a key level that is going to be guiding our trading activity for this week. And if you look at the structure closely, there was a key level I was able to identify at the 135.00 level, which happens to be a strong psychological area considering the round figure of that price. And look at what has been happening since the month of April. We saw how this level was a very strong selling niche at one point before we witnessed the breakout of the structure during the last trading week of last month. We saw the breakout of that structure. Then price action came back to break down the structure last week. And what we saw in the last couple of days in this market is that price action is back into that structure, and since then it has been ranging around that area. So what this simply tells us is that there is a level of indecision in this market, as majority are not sure if the breakout of the 135.00 level is something that is looking reasonable, or probably the breakdown of that structure will incite a sell-off. And one thing about this kind of structure is the fact that it shows the fact that majority are looking forward to a catalyst that will be driving price movement. And remember, I shared with you on the economic calendar today that we having this week is laced with a handful of high impact event. We have the consumer price index coming up on Wednesday, which is a measure of price movement by the comparison between the retail prices of representative shopping baskets of goods and services. And it also gives us an inclination into the inflationary status of the US economy too as well. Then if we go to as far back as go to Friday, we have the Michigan publication, which gives us the consumer sentiment index, which is a survey of personal consumer confidence in the economy. This shows us a picture of whether or not consumers are willing to spend money. So these are very high impact events that majority would want to be looking forward to, and we're beginning to see the reflection of this anticipation on the chart. So what we are going to be doing right now is to scale down into the 1 hour time frame to see how participants in this market is going to be reacting to this key level at the 135.00 area. So in that regard, we shall be scaling down into the 1 hour time frame, and here we are on the 1 hour time frame, and this is what I was able to spot on this chart. So we can see here the highest point price action has been for this week is the 135.300, which is now a resistant line that will be guiding our activity for today. And price action started at the 135.850, which happens to be the support line for this week, as you can see. Then we saw the breakdown of the support line here a couple of hours ago with a signal that price action might likely be going to the downside. But at this point, it is important that we wait for a retest of structure, and we saw the breakdown. Price action came back into this level, and since then, in the last 5 hours now, price action has been ranging just right around the 135.00 area, that very important key level that is supposed to be our yardstick for the week. So based on the structure we have here on the 1 hour time frame, that is this channel between the 135.300, we are going to be having a buy stop order above the 135.300 so that we can capture this opportunity if price action breaks out of that structure. Then at this point in time, it is ripe enough to have a sell stop order below the 135.850 just in case price action goes that way. And the reason why that is so is simply because we already have a breakdown of the structure. Price has come back to retest. Then if price continues to the downside, there is a high chance that price action will continue further to the downside. Then if it takes out the previous low, then this will give us more confirmation to add more position to our existing trade. Now, with our buy stop order placed above the 135.300 and the sell stop order placed below the 135.850, we want to see what is going on along the 135.00 area on a much more lower time frame. So in that regard, I will scale down to the 15 minutes time frame to see if we can actually capture any potential move even before price action break out of either the resistance or support line we identified earlier. Now, one thing you will notice, this is the 15 minutes time frame right now, and one thing you will notice here is the nature of the candle wicks here around the 135.00 area. You will see that we have sharp rejection of that area just right above the 135.00 level. Very sharp rejection of that structure, which is a sign that sellers might likely come in. So at this point, you have your sell stop order below the 135.850, and let's see how far that move is going to go. Buy stop order above the 135.300. Personally, this whole structure here doesn't seem mature enough for me to be thinking of selling at this point. So I will just wait for a whole new structure to mature from this level, from this zone, to be part of any trading opportunity at this juncture in the market. So let's keep patient. Let's be patient. Let's wait out for structures to mature before joining any potential move from this area. So these are my views here on the USDJPY for today. If you have any questions, feel free to let me know in the comment section. And it's on this note I want to be calling it a day here. It has been a wonderful moment, and for those who are joining us for the first time, I do hope you are able to take one or two things from this live session that you can use during the New York session today. And I do hope you also screenshot my screen so that you can use it as a reference point when you're about to make your individual decisions. So I wish you best of luck during the New York session today, and I also look forward to seeing you same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs that we have been monitoring so far has been doing, and at the same time get ready for the New York session tomorrow. Now, please remember that the market may seem very, very slow today as a result of the public holiday being observed in the United Kingdom. So we want to be very, very, very patient, as the tendency to be compulsive in our action is very high during this time, this period when market is slow to catch a movement. So let's be patient, let's be on standby, let's wait for structures to mature before we want to be jumping into any trades. So it's on this note I wish you best of luck today, and I see you on the other side tomorrow as we get prepared for another day. Do have a wonderful evening, everyone. Bye bye.